Good morning, this is Ryan Mallory for SharePlanner.com. Today is November 8th, 2010. Pretty quiet day for trading. The market didn't really do too much. It closed with a doji candle. Nothing new there. We saw that pretty much every day in October, but today was a quiet day indeed. I basically only did one trade. I closed out my short position in Starbucks by covering it at the market open. It gapped down pretty significantly in the early goings, and I didn't think that would last throughout the day, so I took the profits while I had them, and I don't regret doing that. What I want to do is I want to look at the S&P 500, see what we're looking at here. Once again, throw the Bollinger Bands on top of it to show you a picture of how overextended we are, and let you know my thoughts on all of that. So let's go ahead and add those Bollinger Bands here. And we'll just put it right over price history. And there you have it. This is two standard deviations off of a 20-day moving average, and 3 days into it, we are still above those Bollinger Bands. We did go into it a little bit early on today, but that did not hold for very long. I don't think that we could put another day in. I honestly think that tomorrow is probably going to be the day that we actually do go down some. When I say go down, I don't mean a significant amount, like 200 or 300 points. Well, I don't rule it out, but I think what we're more or less looking at is just trying to work off some of these overbought conditions in the market. Come back inside the Bollinger Bands really to free up some overhead space for this market to rally up some even more. Because when you look at it from a historical perspective, and I know a lot of you have heard me talk about this, you got the market from back in April 14th where we pushed right above it, then we formed a doji, and then boom, we hit a pretty significant sell-off right there before resuming the uptrend again. Same thing numerous times previously where we just peaked above it right here, and then we consolidated for a few days before eventually coming back down. It's the same thing here back on September 16th, consolidated, then pushed back down. Even if we just consolidate, that would be a welcome thing to me. I think we're going to still ultimately go much higher from here, but I just think that we need to work off some of these oversold conditions first. Here's one case where it really didn't do that back in May, and 2009, I mean, we were just coming off the March lows, and we were early in the trend. We had just sold out. I mean, I think the market had basically seen back in 2008 almost half of its value from the October 2007 highs down to the March lows of 2009. Basically, see half of its value just get chopped in half. So, for you to see a run into beyond the upper Bollinger Band like we did in this early trend is not overly unusual. But even then, you see where it does eventually come back down to earth. The difference here is that we've seen a significant rally over the last 3 months here since September and October, so about 2.5 months, and we're breaking out to new highs, or to highs, the highest since April. We broke through those highs, so there's nothing new about this trend. So, in my opinion, I really think that we're going to see at least a 5 to 10 point pullback here, and when that happens, when we can get a good solid day close in the red of that amount, then I'll start adding 2 or 3 new long positions to the portfolio. I'm not saying that the selling will stop with that, but nobody knows where the selling is going to stop if that indeed does happen here in the near term. And the only thing you can do is just play the probabilities. I think that we are in an extended uptrend. You look at many of the macro factors beyond just technical. We got a gridlock Congress, which is always good. Third-year presidential terms are always good. Earnings season has been very good. PEs are relatively low. So there's a lot of good things going for this market that I think will continue to push this market higher. And there's still a lot of money going into bonds, and once you can get that money to come out of there and flow into equities, man, it's going to be a killer rally if and when that happens. If or when, or whatever. But in any case, though, it should be a pretty darn good rally. So I'm gonna take these Bollinger Bands off and trash them. And I want you to also look at the weekly chart here. There we go. And this is that 200-day moving average that I had done a video podcast of last week. And from what you can see here, and I circled it here previously, we've bumped up against this 200-day moving average, and it has usually resulted in a major sell-off. This time, not so much, though, because we busted right through it last week, and we are basically poised to move much higher. When you look at times before in the past where we've broken through it, yeah, we consolidated a little bit here, put in a bull flag, but then look at the rally thereafter. I mean, we go from the lows of 1065 all the way up to 1549. So that was from 2003, to the heights of the market run where 2007 we peaked. But anytime we've crossed below it too, the selling has been likewise pretty dramatic. So, and then you just keep going back in time. I mean, going back into the 80s, we never even dipped below the 200-week moving average. So, this is a pretty significant moving average, and you don't hear a lot of people talk about it. In fact, besides myself, I haven't heard anybody talk about it. But I think it's something to pay very close attention to. And so, when we are making a cross above it, that's something to take note of, and we did that. And historically speaking, I mean, dating back 30, 40 years, we should see a pretty strong rally from here. I'm not saying it's all going to come in one fell swoop, or that it's not going to have its pullbacks and head scratchers and everything else, but I think over the course of the next year, at least, I think the market's probably going to do pretty good. I know there's a lot of people against that think that we'll double dip. I've been in that camp for a long time, but you know what? I can't argue with the charts. I can't argue with what is in front of me, and like the old saying goes, the trend is your friend.